Hi student, good day. Today is our next up chapter is chapter 5 for non-current assets held for sale and discontinued operation. This is also important topic for financial statement point of view. So examiner like to test student in very oftenly. So keep memorizing this topic as well for which helpful for you how we will uh, identify and how we will learn from this topic from this chapter. It will be very easy to understand. So learning objective of this chapter will be discuss the importance of identifying and reporting the result of discontinued operation. Discontinued operation are those operation in companies that have many different working activities, or sometime they stop some business operation which they feel is not profitable for them. So they decide to stop it, and they decide to sell that equipment. So like if there is a air conditioner factory or textile mill, so if they decide to stop or discontinue some specific department, so they have to inform the stakeholder, because whenever you the auditor prepare a financial statement, so they have this is their responsibility to disclose this type of operation or business activity. If any discontinuation is happening or business operation is going to suffer some losses, so they have to inform the stakeholder as well for their transparency. This is part of their responsibility duties, and all due diligence is also including in this area. Define the account for non-current assets held for sale and discontinued operation. So how to definition process will take place. Identify the circumstances where separate disclosure of a material item of income and expenses is required. So these are the it can be a material item, and which is must for stakeholder to know and to understand what is the company is going to take action against their investment. Reporting financial performance, this step include IFRS 5 for non-current assets held for sale and discontinued operation. So remember the IFRS number, and then held for sale. So how it is measurement process will take place. This is very easy process. So measurement on non-current asset held for sale and discontinued operation. So this is only some sort of representation or some disclosure is mean to understand, then you are all set to go. So IFRS 5 non current assets held for sale and discontinued operation. The objective of this as IFRS is to requirement classification, measurement and presentation of non-current assets held for sale, in particular requiring that such asset should be presented separately on the face of a statement of financial position. It will be in their keynotes, so they will everyone will understand what is happening. So updated rules for presentation of discontinued operation, in particular requirement that the result discontinued operation should be presented separately in the statement of profit and loss account. We'll see how this extract will happen, how you will highlight in this in your financial statement. Classification for held for sale. An entity is shall classify non-current asset held for sale if its carrying amount will be recovering principally through the sale transaction rather than through continuing use. So this is the para 5 IFRS para 6 is explaining. For further to the case, following condition must met. So the asset must be available for immediate sale in its present condition. So the sale must be highly probable, meaning that management are committed to plan to sell the asset. There is an active program to locate a buyer, and asset being actively marketed in the price at a reasonable value. So the measurement of non-current asset held for sale. So this is a measurement criteria. So their carrying amount must be there, fair value less cost to sell, and held for sale non-current asset presented separately in the face of the statement of financial position, and it will not be depreciated. when management decided to this asset is so going to sell it off, so from that date depreciation will stop. So will not company will not enjoy a double benefit of depreciation. They will not charge the depreciation anymore. So this is a must. This criteria is a must. They have to apply on their all activities, business operations activities. Where assets here, this paragraph is also important. Where assets held under the revaluation model or classified as held for sale, these assets be revalued using the method of IS 16 PPE rule or IS 40 investment property appropriate prior to the reclassification. So this is a rule will not be applicable under this these assets. So see, this is a your test your understanding. One is what is asking at the what value should be machine be stated in the Michelle Company's statement of financial position on December 2003. Just read this please paragraph, and you will see how it is going to calculate. On January 1, 2001, Michelle Company bought a stamping machine for 20,000. It has expected useful life of 10 year. So mean to say 2,000 per annum is their depreciation. On 30th September 2003, machine company Michelle Company decided to sell the machine and start action to locate the buyer. The machine are in short supply. Michelle Company is confident that machine will sold fairly quickly. On 30th September 2003 is the 13,500. They are saying there is market value on 13,000 on 30th September. It's the market value, and the cost to sell is a $500 for dismantling the machine and make it available for purchase. So they are asking, so what value should be machine be stated in the Michelle Company's financial statement? First of all, we'll see what is the value of Michelle's in the starting phase. What was the value of this machine is valued at dollar 20,000 at the beginning of the year. So year one depreciation will be there for 2000 for year one. Y1 and Y2 depreciation will be 2000, and Y3 depreciation. You remember? So they said on the 30th September 2003, they decided to sell it off on 30th September 2003. Here it is, they mention on 30th September they decided to sell off the machine mean to say for 9 months you will apply the depreciation. For 9 months it will be applicable 1500. Okay, so these three depreciation will be applied over there, and then see what is their carrying amount of this machine is coming, like 14,500 is the carrying amount of this machine, while they are saying the market value is a 13,500 and its cost to sell is a $500 is there. So but now this is a 13,000, the now is fair value to sell this machine is a 13,500. Fair value to sell this machine 13,500 fair value, and $500 is there for dismantling cost is coming, and then it's mean to say that 13,000 is the value. It will be the fair value, and then they will market value immediately they will sell it for carrying amount will be 13,000. So mean to say the 1500 impairment loss immediately will be recognized in the financial statement, like 14,500 and 13,000 their recoverable amount. So they will consider it for $1,500. They will consider in the P&L account. $1,500 will they will consider it in the profit and loss for the immediate for impairment, and then the machine will no longer will be depreciated. So this all rule met, and they will recognize it in the books of accounts. Okay, student. Now they saying discontinued operation. A discontinued operation is a component of an entity that has either been disposed of or is classified as held for sale. It represents a separate major line of business geographical area, is a part of single coordinated plan or dispute dispose of this equipment. So these type of they need to see their definition criteria should met, and after that any entity must disclose a single amount of the face of the statement of profit and loss for the post tax profit, whatever discontinued operation is happening, the post tax gain also they will recognize in the books of account. The analysis must disclose the revenue, expenses, and pre-tax profit or loss of discontinued operation, related income tax expenses or gain and loss under IFRS 5, whatever is the gain or loss is happening. If maybe the asset is selling on higher value. So this is a statement of profit and loss for the discontinued operation. How it will looks like, and what is a different item will you have to mention in the financial statement. This paragraph need to be identified under this discontinued operation. After profit and loss they will mention this paragraph, analysis of single amount as described word would given in the notes. So discontinued operation, profit from the previous period of discontinued operation, and then profit for the period. So these things they have to auditor have to mention in their financial statement. Okay, student, we will see this test your understanding 4 we will do together. Let's see what they're asking. According to IFRS 5 non-current assets held for sale and discontinued operation, which of the two of the following relate to the criteria of asset held for sale? So you identify which two will be there. The item must be a major line of operation or a geographical area. The A is this one. The B, asset must be available for immediate sale. So this is the one, immediate sale. The sale is expected to be completed within the next 3 months. So this is 3 months is not there. There is a 1 year rule. Reasonable price has been set. Item D. So B and D is your answer for this part question. Number two, they're asking, according to IFRS 5, non-current asset held for sale and discontinued operation, which of the following amount in respect of discontinued operation must be shown on the face of financial statement? Revenue, gross profit, profit and after tax, operating profit. A, all of above. B, only three item. C, two or four. D is a five only. So what they are asking, the following amount discontinued operation must be shown on the face of a statement of profit and loss account. It must be profit after tax. B. Okay, we go to question number 3. Of item held for sale, how should non-current asset held for sale be valued? So lower of carrying amount of fair value, lower of carrying amount of the fair value less cost of disposal. So this is a B is a straight answer. Higher carrying amount, higher no lower of carrying amount. So this is always like in first example, which you remember, 14,500 value, and their anticipated amount was a 13,000. So that was a lower of the carrying amount they considered. So number four, what they are saying, halfway through the year, an asset identified as asset held for sale meeting the criteria of 5 So carrying amount of asset is a 150. Original cost was 200,000 2 years ago. The asset is being depreciated on a straight line basis. What should depreciation expense for the year be? What would be the depreciation when it was applicable, when it they then when they applied, and what is the period? So the of a year asset identified as held for sale, non-current assets start the year carrying amount of 150. Original for 2 years ago, the asset being depreciated on straight line basis. So depreciation should be charged for the first 6 months only of the year, and these case when the asset is classified as held for sale, the carrying amount of the decreased by 50,000 in 2 years time. The depreciation must be 25,000 for a year. Therefore, 6 month period depreciation must be 12,500. What is the number five, reporting date of asset? Identify asset held for sale, remaining criteria according for discount. Where should the asset appear on the statement of financial position? This will shown within the current asset as it is expected to be sold within the year, is separately broke below current assets. So they will mention in the current assets separately under the note. 6, they are saying CAT has the year end 31st December on the what is in accordance with the 5 non-current asset held for sale. What amount should be recognized in the financial statement? So this is a little bit longer part which need a little more time for your understanding. So we will do it in our revision session. So we'll see in the number 7 we will see. So for each issue, identify the correct accounting treatment in the financial statement. Asset held for sale, discontinued operation, or neither. A loss-making division which made Materia have agreed to close next year, which nothing, there's no operation, no nothing, no gain, no profit, no loss, there is nothing. So there is this rule will applicable. The factory of material which is being marketed at a reasonable price at the year end. Here it will be asset considered as a asset held for. So material specialized plant which will be advertised for sale once it has been dismantled. It is again fulfilled neither. So if it is there should be a number item, their intention to sell, there is a management decision. All these things need to be identified. There is nothing is there. The chapter summary, reporting financial performance. IFRS 5 for non-current asset held for sale and discontinued. Held for sale, this is easy. Remember all these parts will helpful for you for your understanding. Discontinued operation, and then there is a disclosure, there is a mention in the financial statement. Okay student, this is all for the day for this chapter 5. See you in the next chapter 6. Wish you all the best and keep learning, keep performing best of your for I can